Hey everybody, it's the Crypto Sniper. Yep, coming back at you. So let's talk about the state of the markets. It was round about the 15th of November, as you can see down here, when we were last on Real Vision, that in a segment which is designed to be about crypto and a crypto segment, I found myself talking so much about the FX markets and the state of the FX markets at the time. So much so that Ash Bennington, the star host, regularly referenced and said, bring it back to crypto, bring it back to crypto. And the key element for this was the overriding suspicion that we were going to have a sustained spell of dollar. I'd already been talking for 2 or 3 months about the dollar being forthcoming turning and potential reversing, and the effect that that was going to be having in crypto. And now, as we were approaching this neckline, as you can see here on the purple line in the video, that I saw it as a seminal moment for crypto, and that crypto initially would not fare well under the headwinds of dollar strength, with reference always long run to the key flippening event when, as an asset class, crypto goes up, Bitcoin goes up, even on a strengthening dollar. I've had a number of responses and retorts on Twitter. Yeah, like crypto cares whether your Fed-sponsored fiat Ponzi is ceasing the amount of money it's going to spend on buying its own bond garbage, or comments that show the Bitcoin chart from the early years, 10, 11, 12, 13, 14, any of that time, yeah, like the dollar mattered any time during that moment. So I want to make a key point here. Pricing is done at the margin. The people who are trading on the day. Long-term hodls do not affect the price. They are not engaged. New money does, getting in and getting out. And as you are awaiting and opening up and receiving more home office and institutional money, and as you are now reaching a total market cap of all crypto in and around $2 trillion, you have now become a risk asset category, just like growth tech stocks, just like bonds, just like everything else. Only you're the smallest of the lot. You are a little pippy in a land of big pippies. And that is where crypto is. That's not to diminish it as its relevance generally, and blockchain as a whole. I've said, and I'm on record plenty times, that certainly it will become the future, in the same way .com stocks were not an irrelevance. But the point of the matter is, when they first make their emergence, they are high beta, they go high volatility, and at the end of the day, they don't hold back forever. Yes, they can boom, but in changing economic environments, eventually they get weighed down on too. So I found myself talking a lot about FX. I talked about the Euro USD as well in this chart, and I was highlighting that the dollar index as a whole on a bigger time frame was potentially setting up a long continuation pattern. In short, the FX effect was going to start to be the other half of BTC USD was going to start to become more of an equation now that Bitcoin was not omni-dominant on its way upness. And that was a key moment, and that was in around the early part of November. And as I say, we were talking quite a lot about that prior to appearing on this show. What else did we discuss? Well, I want to remind you that on the macro events, we've been there on crypto just about every single way. We've warned of grind lines, potential head and shoulder structures. We watched this particular head and shoulder land. We kept you in the trade when you went into a very painful grinding wedge with marginally lower lows before going up. We have been on the Bitcoin march for a long time, and broadly speaking, we haven't done too badly. On the 24th of November, I actually recorded this, so let's just have a little bit of a reminder of this. This important chart was done on a monthly time frame. And I was highlighting at that point in time that the monthly close for November was of great concern. Bear in mind this is log scale, so it actually diminishes the more recent moves that I'm highlighting here. So just to be explicit, where are we looking in this video in terms of all of this? We're looking at this period, and most specifically what I was referring to as a rather soft, almost a shooting star in comparison to the previous candle. On top of it also being, and you've heard this more times than you care to want to be reminded, marginally higher highs. And we forewarned this is not a great time to buy Bitcoin. By the way, that was in and around 56.5, if you can see the number there, 56.5 time frame. That's charging in at this time would not be advisable. Let's just check in with that video again for a second and see how it was. This was 24th of November on this channel, Crypto Sniper. And now you've actually got, at a very high time frame, monthly. This month is almost over, good peoples. There's only a handful of shoplifting days left till expensive turkey buying time, cause inflation, not because of, climate change, for example. You made a marginally higher high, and you're doing a shooting star. On the weekly time frame, you've got to accept that there could be a possibility. Macro time frame in candlesticks is your friend. This is not a time for rushing in to buy Bitcoin. If you're a maxi and you only buy Bitcoin, it's not the time. It's not the time. You're probably going to eat some more red, potentially. This is potentially going to set up some form of a rising wedge, which is one of the toughest patterns of a bull market to trade, because every time you make a new high, you feel the most bullish, and every time it happens, it turns around and reverses. And when it's going down, you're always a little bit nervous and you don't know how to trade to the level. So people that trade momentum get killed. So key moment there. So the warning, the key points that came out of that: shooting star, marginally higher high to the previous high, rising wedge likely structure, potentially, if we are still in our suspicion of the macro bull. In other words, more of a headwind. I want to also just highlight that leverage should be rarely used, and the best only long-term period where a long-term leverage hold would have been in the bull run that occurred there, which was all and around the first cup gold nugget, which we told you would be the absolute best period for Bitcoin trading long. All those people, the 100,000s by year end, all those guys that are the biggest number throw-outers that are always out on those kind of forecasts. If we do not have an HVF, we haven't said it. Every other crypto commentators at some point during the previous year said 100,000 plus by the year end. Some have even said 250,000. In the giddy moments of the run-up to the 64,000, which occurred quite early on in the year. Don't forget, that was already in April. Everyone was like 150, 250 by year end. This is the giddiness of momentum chasing. This was your best moments for any form of leverage, to be net long Bitcoin with a bit of leverage. That was one and only. Rising wedges are not good trading markets. Most markets are not good trading markets. Apart from maybe a short there, and maybe a short just before subprime, and a short long over here. When you reversed, you got to be in when everyone is miserable. You might have made some money in that period, but generally even those weren't the easiest of periods. This was your best period to be leveraged long in crypto trading. So what else do we have for you? Well, a couple of other things I'll show you that have occurred. Watching other channels, and good things to see others now catching up with the dollar index effect. So a plus for the Burb Nest. He's highlighting the dollar index here in his own way. More recently, that's 7th of Jan. So other people are starting to realize, hold on, this dollar thing has got something to do with it. He may well have realized that already before, by the way. He's talking about it now. And he's highlighting about the blow-off high here and the low, and the upside move. And giving us a bit of commentary about this. What I would say is this is less of a ledge. It is marginally higher highs. He does say that. So maybe let's check in with him and see what he has to say.
Right, and potential $30,000 in the market direction whenever it breaks out from the technical point of view, right? Whichever way it breaks down or breaks out. upwards and downwards, to the upside, to the downside, the technical target potentially reaches $40,000 measured from the breakout level, okay, in the direction of the breakout. So in case of a breakout level being to the upside case, which I do believe it's going to happen eventually this year, sooner than later. I still do not believe this is bear market. Then potentially it could get you $70,000, let's say approximately, added with $40,000, or more approximately 60 plus 40 equals somewhere between $100,000. So pure technical target of an upwards breakout out of this long-term.
That's what he's saying on a technical chart. I find it hard to do any serious projecting of targets in the current environment. I would only do it on the Bitcoin NASDAQ, where we have HVF. HVF is the only thing, Hunt Volatility Funnel methodology is the only thing that gives me high confidence targets. Head and Shoulders give me decent targets that can perform, but there's no obligation on any targets to perform. But I find the HVF is most consistently performed to. But the Head and Shoulders can as well. I don't think you have any clear structure on the dollar, although you do on the Bitcoin NASDAQ, which is a unique measure that we are also the first to bring to. So you saw the Head and Shoulder call. You saw how soon we were talking about the relevance of currencies here and before. This, by the way, this video, you won't find it. You'll have to go to realvision.com. It's part of their premium content, or you can be in our community, of course. Link below, www.themarketsniper.com. You can see when the FX is going to become more important than the crypto itself for that period. And the Bitcoin's power and strength is not overridingly dominant, and the FX market is a much bigger market. So it will bully the smaller markets below. As a small comment, not to talk negatively about a guy who seems to be doing good work, small comment I will make is these gaps, discussions about gaps on CME are, in my opinion, not correct. So in other words, we've all got printers and we're continually getting seismic data of earthquakes around the world, and I pull my printer out the wall for 2 days, every 7 days. I can't say, hey, there's a gap in the data. No, there's a gap in my printout as a reflection of that data. Everyone else who didn't pull their printers plug out the wall doesn't have any gaps. And that's the exact same thing. Artificially created gaps because of a 24/7 trading market for which one particular exchange elects to pull the plug for 2 days is not a relevant gap in my view. Remember that. No opportunity. When you go from a Friday on an equity and you open at a different price on a Monday, there was no other opportunity anywhere else to trade that equity. However, if it traded all the way through that gap on the exchanges where there is an opportunity, and those exchanges still represent a significant volume of total trade, you have to realize that the futures markets are still relatively new and relatively small, although no doubt going to grow and their dominance may escalate. But for now, the crypto exchanges are still the massive, never mind the decentralized ones. But still, some nice work from that individual. Again, we were referencing the continuation pattern as an HVF on the NASDAQ. This has been brought to you as an idea a lot of times right here on this channel, and we'll touch in with that again. Calling in this point, we assess that there will still be a little bit further down to come, and I'll be showing you shortly how, in fact, that has come. That maybe we should have a look at that now. Let's go grab it, and we'll go dividing the NASDAQ, same NDX, and you'll see how that move has now materialized further to the downside. In fact, I shared this chart and I said there's a box waiting for us here. So far, we have already dipped into that box. It may come again. I may have just nipped the tail of it all. But these are two high beta risk assets where the one is slightly dominating the other generally. But when there's risk off moments, people risk out of Bitcoin before they risk out of Apple shares, for example. But we are watching this moderate downflow. Has it bottomed entirely, or will we still get a kiss of the 2.5? Who knows? That was my guesstimation some time ago of the box, and we have now made it into the top left corner. It's yet to be determined whether that is the final. Now, the value of this is the target we get out of here. We can have an HVF a Hunt Volatility Funnel method. You can find out more about how to utilize our methodology that is bespoke to us in our community. You can find out all about the technical assessments we do on an ongoing basis, with regular interactions with my community members, with media recordings much like this on a daily basis, sometimes multi-times in a day, with chart shares and various others, and communication with other smart minds that have all invested to ensure they build wealth in these reset times. Go to themarketsniper.com and do the necessary. Book a chat. We're asked to talk to everyone. Don't be shy. We're friendly. We don't bite. We just have to make sure there's not unrealistic expectations. There's real risk when trading in markets. We prefer to use leverage very, very rarely and at key moments. And I gave you the first cup gold nugget as one period where you might have had a sustained period of leverage and it would have served you. So in terms of actually having targets here, you're looking through 6 at least in terms of NASDAQ buckets of equity, and currently standing at 2.7. So that would be safely going for a 2.5x overperformance in time, not yet here. We still need a bounce and a third up and over before that becomes clear. In short, crypto's period of dominance and being the fastest horse is over, and the best time for it was here, in recent times at least. Of course, there were other times. Let's just see if I can get this on a log scale. The best time for it was recently here. You should have been net leverage long here. After our key run of our target at 3.5 to the tech stocks, thereafter tech started to catch up a little bit and push back and charge hard on its own. You would have got out at around the 3.5. Now that would be in and around circa, my guess, around the $50,000 mark. By the way, we also had overperformance bands, which gave us an excellent exit on crypto as well, if you weren't sure about it. And that is a special, we call them, actually, it's an overperformance trumpet. We call them that for that reason, because they are expanding volatility, and you could have also got out on that lower level there. Ignore the rest of the lines for now. There's a lot of overworkings, quite a rough cut chart now. Need to tidy up, but you could have got out in and around the 56 as well, after being long from around there, 10K. So you could have done very, very well, and now you should not be on leverage. It is not a high probability period for leverage. So the point I'm making here is more people are starting to come around. And a lot of these people have far higher followings than us. They're starting, I mean, this guy's saying lots of respect to credible crypto. My macro bullish thesis, this was on January the 5th, for the full version summed up here. For his sound, consistent analysis, it's good that there's someone who does that. As a running, I agree with the assessment of the running correction. Also making a case for a rising wedge. In fact, I think he did it better, where he showed the wedge. Let's just see if we can find the one. He actually named it in Elliott. There you go, slightly more wedge-like jaw for upside. A chart like that, I think he also done a couple of versions. That's the one I was thinking of. So other people, Elliottians, getting to the point where they're going, okay, we're calling for a flat, an extended flat. That's Elliott speak for a bit of churn and tightening before reasserting in a particular direction. And in this particular instance, that would be a move to the upside. So other people are starting to come to our take on that front. However, I've also seen the head and shoulder callers. I'm a bit reminded of the Michael Burry incident. Before I go to that chart, Michael Burry incident, and I'll remind you of that one. Let's just take the eye off there. There were those that called this a head of shoulder. Michael Burry was one of them, him of the Big Short fame. If you don't remember this, the film with Christian Bale, and they were all saying overlay draw, bring it on, macro head and shoulder, Bitcoin to 10,000. Richard Hart agreed and retweeted that. and shared that view at the time, and declined a bet that Bitcoin would make a higher high than the previous high before making 10,000 or even 20,000. And that was being called as a head and shoulder. And given that we had called this as a head and shoulder, it was quite interesting that we said no. Why? Because of clear signs of hammering, squeezing, falling wedge, extended time frame of right shoulder, and a variety of other things that also included our commitment of traders report assessment. So the question now becomes, with where you are now, and we did suggest inside the community that this is going to be a key technical level, just run that one, and that one will be tested and just run. That's how you get the bears in. There's a lot of people now that will be storming in to say head and shoulder short again around about here. Most head and shoulder calls, particularly in Bitcoin, I would say probably fail. If there's lots of obvious ones that others are automatically calling, I become even more skeptic. The market ear was highlighting this last draw here as a head and shoulder. I would, in my first likely scenario, the rising wedge Bitcoin scenario, would argue that sentiment is at an absolute terrible low. In fact, there was a nice chart from looking into Bitcoin. I'd like to have a little look for that one. Let's have a pause. So from here you'll see also the Bitcoin Fear and Greed Index. When you tend to get into very low double digits, it's often unlikely that there's too much more downside. That doesn't mean there couldn't have been some pretty low and ugly numbers along there, but these are pretty extreme. And that's usually when people are at their most negative. They've generally been worth fading. It would have been nice to see what some of the values were at this point, because I think they also would have been fairly low, but I think they were not quite at the extent that you find them at during these periods. So could this be the second impulse? So we've had a first impulse of Bitcoin selling off. That was the head and shoulder that we took you through. So let's have a look at it on the total chart and just wipe our face there of the overlay draws. That was the head and shoulders sell off on the crypto market cap. So on Bitcoin it looked more like this. Let's pull it through. There's the head and shoulder sell-off. And now you've had a more graduated sell-off. I want to just highlight something for people that are feeling super negative. That was an ugly spill. This has been more moderated. There is what I would describe as a descending grind line along the lows there, which makes it a little bit more feasible to see a channel. That was a proper throwdown. That was catch the elevator, where this is the escalator. This is the elevator with a zero gravity flight simulator in it, and the floor just disappears, and you're in kind of free fall plummet for a while before the floor starts fighting back a little bit and your stomach ends in your backside. So it's not quite the same rate of descent, and momentum is quite important to bear in mind on all of this. So again, the scenario that we put to you on an ongoing basis, and that I would argue was once again the first, I hadn't seen anyone else, it's our own originated thinking. We're seeing more and more people emulate this as a way forward. There's one concern, and we have another scenario to cover this. We cover this one in more detail in our premium community. So once again, www.themarketsniper.com if you want to become, that is a corollary to this potential option, which would, I would say, be the next biggest thing as possible, and probably rely on the Fed doing something deeply stupid, which is certainly quite feasible and likely, and being overly aggressive, having been behind the curve, trying to assert that they're on the game, and breaking the financial system when they're tightening. You could in fact see a deflationary smack. We discussed that in more good detail. But our primary, I would say, our bull rising wedge scenario. So the bull rising wedge scenario could mean that this is a technical short-term re-entry point for people in crypto. Would I go in all holes barred? No, but I never think, it's never easy. I mean, the best buys are often at the most uncomfortable ones to put on, especially when sentiment is exceptionally low. So it could in fact be one of the best. It's kind of like the health event of March 2020 lows. We all were, wow, that's significant. That's going to be a great entry. It's not natural markets. It's all like, fear, fear, fear. But anyway, so this could in fact turn out to be an interesting entry point. Did it just run? In my opinion, on the Bitcoin, I think it did. So we're just going to take the lows there of the current view. That's the weekly view so far. Bear in mind this week isn't finished, of course, and the low is 39,672, and I think it comes down to about $8, 39,678. So there you have it, $6 difference. So you've run the technical lows, both of this absolute capitulative spill with a partial bounce and the previous pullback low. Those are perfect technical points to clear out most stops, which is exactly why I say this structure is the worst for retail traders, especially those that will be, and that's nearly everybody, wants to be with the momentum. If you aren't trading to a level like institutions, which have price points that they see as buy levels and distribution levels as well, if things go up too fast. This marginally higher high, we've said enough about it, but this is an absolute new highs for Bitcoin charge, and unfortunately didn't work out well for those. So people buying new highs or chasing momentum after 3 strong candles invariably get washed. So this could in fact be a very good re-entry point, but outside of the Fed scenario, Klaus Schwab hack scenario that we discuss in more detail in our community. So that's where we are on Bitcoin. What else have we got for you? We were looking also at Ben Cohen does some interesting stuff, and this was kind of the one thing so many people missed, and I'm afraid this is everybody in my opinion, is that this was uniquely special, this particular first cup gold nugget. So you were automatically going to dip lower than you've ever been on your lowest point there, which was the event referred to. And then that would jettison you very much more to the expensive side of something like this, pinching bands of relative value, high value, and expensive value on the two. If we hit the button here to see how we've gone, one shouldn't be surprised to see that things have got a little bit less simple, and you would of course be in your red zone after that high there. Now this isn't going to be exact, but you would have probably, these are straight lines I'm drawing, you would be on the more expensive side. Bearing in mind that the cycle is extending, you haven't run right to the high, but you would expect a more benign and disinteresting time, and that could be all you need to sort of fizzle around, set around, and make a third impulse, and then sell off again, a little bit boring up, a little bit boring down. No macro major moves. The green line would probably be coming up along here, and you start to get to closer to cheap value in and around these green lines catching up, which could then set up your next move up. However, remember, the extent of the up moves in percentage terms are reducing. This was your first cup gold nugget trade. This was the best time to have been leveraged long, and that was that journey. It wasn't this journey, and it wasn't this 2-step macro journey, and it wasn't that journey. So you can see they are coming off, and this would have to go sideways for quite a while before it started to represent the green zone again in terms of Ben's chart, which is interesting. So the macro continuation pattern that we highlighted, and this is retrospective, so I know it's already passed, and people say, why you talk about it so much? People didn't understand there was a uniquely bullish moment that is now gestated. Things aren't going to be always your own way, and the use of leverage should be very judicious. Other people also sharing interesting charts. Kung Fu Volker, shout out to him. he was showing something, and it highlights the exact same point. BTC mostly unimpacted by market fear. Major risk on accumulation fade, BTC mostly unimpacted by market fear. And then now he's calling it a leading indicator for risk on and risk off. In some ways that's true some of the time. The institutionalization of BTC dips in line with wider market fear. The risk on accumulation phase was actually the first cup gold nugget. There's your RL2, that was the COVID spiller. I wouldn't have said it's unimpacted during that phase because you spiked immensely with the risk off of COVID. You spiked down very strongly, so it was affected by macro events even more than the tech market, even more than anything else. It was high beta and very risk off moment. So I wouldn't have said unimpacted during that period. But what you did get was the macro technical first cup gold nugget that you can't see. You can only see the impulse 2. Remember, we called that high on the shooting star. Yep, the crypto sniper. Poor old crypto snipes on his 40,000 subs. All these other guys, hundreds of thousands. If they could only call as much as the crypto sniper has called. But nonetheless, we are happy to have the people we do have. That's the reason that went up so fast, and it largely didn't matter because it dovetailed with the dollar also having a weak period. Bitcoin dovetailed with dollar. You got two universally diametrically opposed forces happening. You had a final blow off of strength in the dollar that went up, and then a sustained period of dollar weakness and printing, for which the best protection was Bitcoin. So it's kind of like when number 1 and number 2 play each other in the Premier League football match, and goal difference matters. Not only if number 2 beats number 1, the current champion at top of the table for now, not only do you stop your rival from getting 3, you get 3. It's a 6-point swinger. And if you score 4 goals and he scores none, your goal difference goes up by 4 and his goes down by -4. So it's a 6-point swinger with a doubler on the goal difference. However you score, you get a doubler benefit because your likely biggest rival, it's coming to the close of the season, and it's probably a premiership title determining clash between number 1 and number 2. This is the case of fiat and anti-fiat. Right now, because gold, I think, is so well manipulated, Bitcoin has been behaving like that, and this entire first cup gold nugget structure setup was living with Bitcoin and dollar's relationship, where one was somewhat strong, somewhat weak. Then we got a sustained period of extreme weakness combined with a tailwind of sustained strength, and that was in the HVF structure of the first cup gold nugget break that occurred on Bitcoin. And that's what this individual is essentially noticing, risk on. As I say, wasn't entirely impacted. It was kept down when the dollar got strong. And a lot more people have noticed that. We've put the dollar index below the Bitcoin chart and shown you this repeatedly in previous clips, and others are starting to do it too. So there's your monthly close to shooting star. That was the end of November. We said it's not a good time to buy Bitcoin, and we are in a macro bull and we're generally bullish. Look how that saved you money, and that you could have come back and purchased there if you listened to it. Now this is on the euro, by the way, for those of you wondering why it says 37,000, because we also gave you a euro head and shoulder that was a head and shoulder that did perform in a previous video of ours, and you can see it here. There she blows. Let's get a few more hours on that one, shall we? So what's actually happened is the euro's actually had a spell of strength. This was a head and shoulder that we called. We had that video. Where was it? One of these. No. I've lost it. But that was the one which we called and gave you as well on the Crypto Sniper. And you can see how subsequent the target was support for a short period, and then it surrendered. The target zone. And a lean on there. And away you went. And now a bit of hammering, could be over. It might be a bit too early to say, but that is the Bitcoin against the euro. Because the dollar started to become a bit of the story, it's always helpful, always wise to take a wee peek at the other currencies. Of course, the euro being one of the most significant others. So if we stay with the euro and take this off eyesight, you would see a similar structure potentially emerging. Is this your recovery call, which is in essence one of our views? But is it now? Is that enough to call a bottom? I don't think it necessarily just surges to the upside from here in a drop of a hat. But it could be close. At what point is this no longer a rising wedge? Where are you wrong with the view? So the key answer to that is it's certainly no longer a rising wedge. When you run any of these lows, I would argue, even the first one here on the euro, slightly different on the dollar. This was a lower low on the dollar. But you can't be still in a rising wedge. By the way, I would say you already have indications that it's not going to be a rising wedge, when if you take a parallel line through those two highs, so if I were to draw something parallel, and you already then run that level, you're already no longer in a constriction scenario where the up and down legs are becoming more graduated, and you are getting a longer term constriction, which will set up any future break to the upside or downside. Remember, rising wedges traditionally in technical analysis are downside breaks. That could be Klaus Schwab scenario. But we don't know for sure. But once you've taken the parallel line out, then that is no longer. So that's the point at which you're wrong. I'm not quite sure I've made that perfectly parallel. It's probably the second one. I'm not quite right. So it should be finding support soon. Also interesting on the euro there, a little bit close to the 34,000, marginally lower lows, volatility coming down, etc., etc. A more moderated sell-off gradient compared to the spiller element over there. So in actual fact, your down leg is, despite everybody's state of fear, less pronounced. And of course, everyone's in the same state of fear they were at here when we were calling long, and here. So you both were single digits on fear and sentiment. Now, because we've got a bit of an uptick day today, we're probably back in the teens on crypto fear and sentiment index. Here's the crypto market cap. So Bitcoin up 2%, Ethereum around 5%. Binance had a good day of recovery, 8%. So you're getting a little bit of maybe a small amount of improvement on it, but it may still be reasonably low. Where are we now? Let's have a look at that. I actually think I've got Phil Swift's one there. I just want the sentiment. Crypto. That's the one. So back out of the 10s to 21. Still in the extreme fear zone though. Good. Total market cap, as I said, is this now the low? Total, again, very close to this previous low. Maybe you dip a little lower and just run that. Not all of them necessarily have to do that. But again, I'm highlighting this is not the worst sell-off compared to what you've already lived through when the total market cap fell from 2.5 trillion all the way down at its lowest point to 1.28. That's almost a halvening. In fact, it should have been a halvening. Bitcoin went down 55%. That recent high just stopped shy of 3. Isn't that interesting? It says, actually on here, it says it made 3. So the high was 3. Didn't hold it for a second. And now you're at the low of 1.83. Could be a very good entry point. Could be a very good entry point if this scenario is to play out. So what is the next, what is it? To be explicit about what would next come, I don't think it has to blast off straight away. It can do something like this. A little bit of mucking about and then slowly piecing together some form of recovery. Not too quick, and a couple of corrections along the way. And then also a more graduated downside again, but slow and boring. This is where people get really dull, bored, and they think it's all dead, nothing's happening. Something like that. I've also drawn it slightly big. It's likely to be proportionately a little bit smaller. So if you can like reduce that to about 70%, shrink it down and pull it across. Just wanted to drop some detail in there. Yeah, it wouldn't. This is not a time projection. In other words, it's not the time gradient along the bottom. I'm not saying in June it's going to make another low. It's more a case of that's what I expect it to do within the constraints of the basing ascending grind line and the capping ascending one, which is the constructs of a rising wedge. We go into more detail on that in our community, and you can get the learning materials, the course materials, the interaction with top-end snipers, regular webinars, 4 or 5, well, let's be accurate, at least 3 a week, updates from me personally separate to those throughout, and lots of opportunity to talk about reset, to talk about the crypto and also the traditional markets, which have had a big influence on that. Good. Is there anything else I wanted to show you before I sign off? That was the Bitcoin Euro we've discussed, and we've spoken about that. I think that's largely it. So I'm staying with Bitcoin at the moment. This is the God market. Yes, have there been some shooting stars that have gone up in spite of all of this? I think Atom and Link's been done fairly well. The point of the matter is, don't try be in those stars when it's a time to be defensive. 9 out of 10 times you'll be wrong. Maybe 90 out of 91 times you'll be wrong. I don't know. When it's time to be defensive, be defensive. Is it the low? In one of our scenarios, one of our main scenarios, it is very close to potentially being. Is that bottoming? Well, let's have a look at it. We're looking at the BTC Euro. Some of you might notice head and shoulder type structures in there, for example. You don't need to have too much imagination to see them. So you can see there's critical level. It's sat on a ledge here. That doesn't mean bull all the way from here. But it could point to short-term lows and even maybe a longer-term low. So how would you draw for a possible head and shoulder? Well, this has to be your head as your lowest point. That makes that your right shoulder, which gives you a rather large left shoulder, which had a couple of shouldering moments in it, a complex one. Do note that there was already a possible left shoulder head and right shoulder that then got plunged through a little lower. So reversals aren't guarantees in any form. That was actually the BTC Euro. So let's go to the BTC dollar and do a lower time frame assessment for you. So on the BTC dollar, given that the dollar's actually been a little bit weaker than the euro at the moment, what I see is a rare moment. We should actually pass by the dollar index because it's now such an important part of the story. So you can see the low here. It's a bit of a non-standard head and shoulder, but it is still qualifying because that did reach, I wouldn't say it's a textbook beauty queen is what I mean. It did reach the neckline that's required to. I would choose 4,600 probably, not an odd number. kind of had one shoulder in there. You try to make a head and shoulder, and then you failed. So that's all part of a complex head. So you could actually get an amplitude from around 42,600 to the lows of 39.5, which would be about $2,100 as a target that could be projected from the 42,600 as an idea for upside for you. Is it 3,100? I should say 3,100, shouldn't I? Onto 42, so it's decent as a move up. And it is coming back to that neckline. Is it the most classic, super reliable pattern? No. Is that some form of short-term bottoming? I would say yes, it is. I don't think there's immediate downside to come, and possible reversal is more likely. How sustained? Another question, but we'll see. We'll see. You could, of course, form a rising wedge and go lower, one more stab. So people tend to get in a little early. I don't feel it's a requirement on you to do a huge amount right away. You can always wait a little bit. If you got out and got defensive, when we first started talking about defense, you should be well in the money. You haven't ridden the elevator down, and you should be okay. So let's have a look at dollar index, and then we'll finish what is quite a lengthy vid. So is this a bull flag, or will it break through the lower end and prove not to be a bull flag? There is some signs of roundness to it. It could pull back and even head towards the neckline again. We can't say for sure, but at some point we also thought he'll work his way back across to the other side. The euro is in huge trouble in so many fronts. It's not got a tightening interest rate policy. It's got disproportionately expensive energy, and the loss of value of the euro relative to other compromised currencies, to me, is virtually assured. But that doesn't mean you can't, you don't have to get your timing right with that. So we'll see. We'll see if this is a more protracted sell-off. The fact that this didn't go quite the way to the other side is a slight worry. So maybe the flag speculation is a little premature. We'll see if that happens. If we break through this red line over here on a sustained pattern and have a close below it, you'll be looking at a deeper pullback. That will support Bitcoin a little bit on its tentative recovery, and could make it a great time to be back in the crypto space. Okay, that's it from me, guys. I'll look at that inverted for you, for those of you that want to see it from a point of view of the Euro USD as a pair. The question now becomes, is this an up move, or is it a, let's get it over here. And as a reminder, by the way, we still have a target to the downside on the Euro USD. So you want, actually, right now, if you want Bitcoin strength, you want this to break out to the upside. So it does look like it could squeeze out the top here for a bit at the moment. But that can change very suddenly, as you can see on these candles. But this is a head and shoulder which has a 110 target. Personally, if you were asking me what I most want, I would want us to get down and make this target and get it done with, and then have a pullback. That would mean possibly more downside for Bitcoin. But if we had more downside, it could spoil our rising wedge scenario. So maybe we need that little flurry. Bitcoin re-gets a bit of strength, and then the euro rolls over later after Bitcoin's had a rally, and it comes down for its third impulse in that rising wedge. That's maybe how it plays out. A couple of scenarios for you to think out. Thanks for sharing. Thanks for liking. Book a call on the link below if you value being in a community that's dedicated to this. I haven't had too much time for free view updates. You're waiting a fair while, so it's worth being in us. I've given you a bit of a lengthy one here. Hope you enjoyed it. Best thing to be is get our current thinking as it is coming out through the community. All the best for now, and have a great week ahead. Bye.